All right, welcome back to Talk Tickers, everyone. Today we're diving deep into BlackRock's Q4 2024 earnings call.
Yeah, big one, huh?
Huge, and honestly, there's a lot to unpack, so let's just jump right into it. We saw record inflows this quarter.
Yeah, $641 billion in net inflows. It's a pretty staggering number.
It is basically every investor and their dog throwing money at BlackRock. But they are delivering now.
Yeah, they're not just getting bigger, they're actually getting better, too. Like their organic base fee growth hit 7% in Q4.
Which is the highest in what, like 3 years?
3 years, yeah.
So they're really showing that their strategies are working. What really stood out to me, though, were the acquisitions.
Yeah, those are interesting for sure.
Global Infrastructure Partners, HPS Investment Partners. They even bought Preqin, the private market data company. It's like they're on a shopping spree.
Well, they are, but it's a strategic shopping spree, I think. It's all about positioning themselves in the private markets. That's where they see the big growth happening.
So you're saying the old 60-40 portfolio, stocks and bonds dead?
Well, I wouldn't say dead, but maybe on life support.
Okay, on life support. BlackRock CEO Larry Fink actually kind of hinted at that too, didn't he?
Yeah.
He basically said the 60-40 model needs a serious upgrade.
Yeah, he did. And he's not alone in thinking that.
All right, so private markets are the future. Got it.
Yeah.
But why should, the average investor care about any of this? Why are we spending a whole episode dissecting BlackRock's moves?
Because BlackRock is kind of like the trendsetter. What they do often signals where the whole market is headed.
So if they're betting big on private markets, maybe we should at least be paying attention.
Exactly.
Okay, I'm convinced. Before we dig deeper into all that, though, anything else from the call that caught your eye? Any fun facts or surprises?
Well, I did find it kind of funny that Larry Fink, the CEO of this, financial giant, has a pre-earnings call ritual that's surprisingly normal.
Oh, please tell me he doesn't do ice baths or something crazy.
Oh, no, nothing like that. He just eats a bowl of cereal with blueberries every single time. Seriously. That's it. You'd think he'd be having, a steak dinner or something.
Nope, just cereal and blueberries.
Huh, well, there you go. Financial masterminds. They're just like us. Okay, let's get back to the numbers for a second. What were some of the key drivers behind those record-breaking inflows?
Well, aside from the obvious trust factor that we talked about, it's also about their operational efficiency. They have achieved impressive organic base fee growth. That basically means they're making more money from the assets they already manage, which, suggests their strategies are actually working.
So not just getting bigger, but getting better, too.
Right. It's not just about attracting new money. It's about making the most of the money they already have.
And speaking of new money, are those acquisitions we talked about, are they already contributing to the bottom line?
Well, the Global Infrastructure Partners deal, that one closed in October. And yeah, it's already made them a top 5 player in the infrastructure investment world. The others are still pending, but they're expected to close soon.
So they're not just growing, they're evolving.
Becoming more sophisticated, more diversified. But let's zoom out for a second. How does all this BlackRock news matter to our listeners who, aren't managing multi-billion-dollar portfolios?
That's the cool part. BlackRock isn't just any company. They're like a bellwether for the entire financial industry. What they do often signals trends that eventually affect everyone, even if you're not a Wall Street hotshot.
Give me an example. What kind of trend are we talking about here?
Well, like we said, their focus on private markets is huge. It tells us that these markets, which used to be like this exclusive club for the super rich, are becoming more important for everyone.
And they're even talking about putting private market investments into 401ks, right?
Yeah, they are. That would be pretty huge.
Hold on. Private markets in my retirement account. That sounds a bit risky, doesn't it?
Yeah, it's definitely a complex topic, but it's a sign of how things are changing. Something to keep an eye on for sure.
Okay, I'm starting to get it. What else are they signaling?
Well, they're also seeing a shift away from passive investing. For years, it was all about index funds, but now they're seeing a resurgence of interest in active management.
So index funds are dead?
No, not dead. But the set it and forget it approach might not be the best strategy anymore.
You're saying we need to be more hands-on with our investments?
Well, not just hands-on, more like strategic and adaptable.
Gotcha. So BlackRock is basically saying, pay attention, folks, things are changing.
Pretty much, yeah.
Okay, I'm starting to see why we're doing this deep dive. Any other key takeaways before we move on?
Their global expansion is pretty significant, too. They're launching a digital wealth management platform in India, which shows they're looking beyond the traditional financial centers for growth. Huge potential there.
It sounds like they're not just managing money, they're influencing the future of finance.
Yeah, that's a good way to put it.
All right, before we wrap up This part of our deep dive. Gotta have a little fun, right? Hit me with a this is not financial advice trade idea, inspired by all this BlackRock talk.
All right, but remember, this is purely hypothetical. Don't come crying to us if it goes south.
Of course, of course. Lay it on me.
Okay, here's a wild one. Short a long duration treasury ETF like TLT and go long a diversified private credit fund.
Whoa, whoa, whoa. Slow down. Explain that like I'm 5.
Okay, so BlackRock is basically saying investors are underallocated in fixed income and private markets. This trade is betting on both of those trends.
Okay, and how does that work exactly?
Well, if interest rates keep going up, those long duration bonds like TLT, they're going to drop in value. But private credit, that could actually benefit from the higher yields and increased demand.
So if rates climb, PLT goes down, private credit goes up. Got it.
Yeah.
But again, this is not financial advice, folks.
Right. Just
Yeah.
a fun thought experiment based on BlackRock's moves.
Yeah, definitely food for thought. All right, that's it for part 1 of our BlackRock deep dive. Stick around for part 2, where we'll really break down those acquisitions and what they mean for the future of finance.
Yeah, it's going to get interesting.
See you soon. Welcome back to Talk Tickers, everyone. We're still deep in BlackRock's Q4 earnings call, and now it's time to really unpack these headline-grabbing acquisitions they made in 2024.
Yeah, they went on a bit of a spending spree.
They did. We're talking Global Infrastructure Partners, HPS Investment Partners, and of course, Preqin. Let's start with GIP. That one's already a done deal, and it instantly turned BlackRock into a major player in the infrastructure game.
Yeah, top 5 globally, in fact.
Wow. But what does that actually mean, for everyday investors like you and me? What's so special about infrastructure?
Well, think about it. Infrastructure is like the backbone of our world.
Yeah.
It's everything from roads and bridges to energy grids and telecom networks. It's the stuff that keeps our society running.
So they're not just buying buildings and power lines, they're buying into something much bigger.
Exactly. And these things tend to generate steady, long-term cash flow, often with some inflation protection built in.
So it's a way to hedge against those rising prices we keep hearing about.
Right. Plus, there's a huge global need for infrastructure investment. Governments are struggling to keep up with aging systems and, growing populations. So that creates a big opportunity for private investors like BlackRock.
Okay, GIP, I'm starting to get it. What about HPS Investment Partners? What's their specialty?
HPS is all about private credit. Basically, they provide loans and financing to companies that aren't publicly traded.
So like the companies that can't or don't want to go to a traditional bank.
Yeah, you could say that. And this market is booming right now. As interest rates have gone up, it's gotten more expensive for companies to borrow from banks. So they're turning to alternative lenders like HPS.
And BlackRock is positioning themselves to be the lender of choice for this whole private market.
That's the idea.
Ambitious. Okay, 2 down, 1 to go. Preqin. They're a data company, right? Not an investment firm.
Correct. They're the leading provider of data and analytics on the private market industry. Think of them as like the Google of private market insights.
So BlackRock is buying data now.
Well, in the financial world, knowledge is power, and data is knowledge.
So they're basically buying the cheat codes to the private market.
Something like that. This data gives them a huge advantage. They can use it to identify the best opportunities, evaluate risks more accurately, you name it.
And I'm guessing they're also going to share this data with their clients, right?
Oh, absolutely. They're already talking about integrating Preqin's data into their Aladdin platform, which is used by tons of asset managers around the world.
So it's like they're building this all-inclusive ecosystem for private market investing, both for themselves and for their clients.
Exactly. One-stop shop for everything private market.
Okay, I see the what of these acquisitions. But let's talk about the why. Why is BlackRock so convinced that private markets are the next big thing? What do they see that maybe we're missing?
Well, we've already touched on the higher potential returns. Especially with interest rates so low these days, investors are looking for yield wherever they can find it.
Higher risk, higher reward. That's investing 101, right?
But it's not just about chasing those big returns. It's also about diversification. Private market investments don't always move in the same direction as public markets.
Right.
So they can actually help to, reduce the overall volatility of your portfolio.
It's like adding shock absorbers to your investments.
Exactly. Smoother ride. And in a world with so much uncertainty, diversification is more important than ever.
I'm starting to see why BlackRock is making this bet. It's not just a game for the rich anymore. It's becoming a key part of a well-rounded portfolio for, well, everyone.
That's the trend they're betting on, yeah. They think the demand for private market investments is only going to grow in the coming years.
Okay, but hold on a second. Let's get real here. What are some of the potential downsides or risks that BlackRock might face as they try to integrate these new businesses? I mean, we're talking about some pretty big acquisitions.
Yeah, it's not going to be easy. Merging different company cultures, different systems, it's a huge undertaking. BlackRock has a good track record with acquisitions, but this is a whole new level.
And beyond just those integration issues, what about the risks of investing in private markets themselves? Anything our listeners should be aware of?
Yeah, private markets are inherently less liquid than public markets. It's not as easy to quickly sell your investments if you need cash. You're typically locked in for a longer period, sometimes several years.
So it's not like trading stocks where you can just click a button and sell whenever you want.
Right, and fees tend to be higher too.
So this isn't exactly for beginners, huh?
It's definitely not a set it and forget it type of investment. You need to do your research, understand the risks, and work with people who know what they're doing.
Okay, so private markets, exciting potential, but also some real challenges.
That's a good way to put it.
Well, it's good that we're having this conversation then, right?
Absolutely. The more informed investors are, the better.
All right, we've explored these acquisitions pretty thoroughly. Anything else we should highlight before we move on?
One thing that really stands out to me is BlackRock's focus on technology. They're not just buying investment firms, they're investing heavily in data and analytics.
Yeah, the Preqin acquisition is a perfect example of that.
Right. They know that in today's world, data is a key competitive advantage.
So it's not just about what they manage, it's about how they manage it.
Exactly. They're building a digital infrastructure that will help them scale their operations and stay ahead of the curve.
Okay, so we've got a good understanding of BlackRock's private market strategy. They're building a powerful platform for navigating this world, and they're doing it at a time when demand for private market investments is on the rise.
It's a bold strategy, and only time will tell if it pays off.
Well, that's the exciting part, right? Seeing
Yeah.
how it all plays out. But before we wrap up this part of our deep dive, let's circle back to something we talked about earlier. The demise of the 60/40 portfolio. They're that classic mix of stocks and bonds. BlackRock seems to be signaling that it's time for a change.
Yeah, that old model is definitely being challenged. With interest rates going up and inflation still a concern, bonds haven't been the safe haven they used to be.
And stocks. Well, they've been a bit of a roller coaster, to say the least.
BlackRock is basically saying that investors need to get more creative. Think outside the box when it comes to building their portfolios.
So, if the 60/40 portfolio is dead, what are the alternatives? What should investors be doing?
Well, there's no one right answer. It all depends on your individual goals and risk tolerance. But BlackRock's actions definitely suggest that private markets should be part of the conversation.
So what are we waiting for? Time to start exploring those private markets.
Well, not so fast. It's important to do your research and understand the risks.
Right, of course. Not jumping in blindly.
But it's definitely a good time to start learning more about private markets and how they might fit into your portfolio.
Okay, I'm convinced. Private markets, diversification, technology. BlackRock is dropping some serious knowledge bombs in this earnings call.
They are. And they're basically giving us a roadmap for the future of finance. Whether we choose to follow it or not, that's up to us.
All right, welcome back to Talk Tickers. We've spent this whole episode unpacking BlackRock's Q4 2024 performance. And wow, there's been a lot to digest, record numbers, big acquisitions, this whole private market thing. Now it's time to step back and ask, what does it all mean? Where is this all headed?
Well, you got to remember, BlackRock isn't just some random investment firm. They're a giant. They have their fingers in pretty much every pie imaginable.
They're managing, what, trillions of dollars?
Trillions, yeah, more than the GDP of a lot of countries.
So yeah, when they make a move, the whole world kind of pays attention. And they're making some pretty big moves, huh?
They are. And it seems like they're all pointing in the same direction, towards a future where private markets play a much bigger role.
Okay, so we've been talking about this shift towards private markets all episode, but help me understand the big picture here. What's driving this shift? Why is this happening now?
Well, like we said, private markets offer the potential for higher returns. And in this low interest rate environment, investors are hungry for yield.
But isn't this just about Wall Street chasing profits? What about the rest of us?
Well, that's the interesting part. BlackRock isn't just focusing on the super rich anymore. They're trying to make private markets more accessible to a wider range of investors.
Yeah, we talked about the whole 401k thing. Private markets in my retirement account. That's a pretty radical idea.
It is, yeah. And it's not just retirement accounts. They're creating products and platforms that allow individuals to invest in private credit, infrastructure, all sorts of things.
So democratizing access to investments that used to be out of reach for most people.
Exactly. And that has the potential to really shake things up.
Okay, I see the potential benefits, but I also see some potential red flags. Private markets are complex, they're less liquid. Are we sure it's a good idea to open them up to everyone?
That's a fair point. There are definitely risks involved. That's why education and transparency are so important. Investors need to understand what they're getting into.
So it's not just about providing access, it's about providing guidance too.
Exactly.
Okay, so let's say this trend continues. Private markets become mainstream. What does that mean for the bigger picture?
Well, for one thing, it could mean fewer public companies. If more money is flowing into private markets, there's less incentive for companies to go public.
So we might actually see a decline in the number of publicly traded companies.
It's possible, yeah. And traditional banks could feel the heat too. If private credit markets keep growing, banks are going to face more competition.
Wow, so we're talking about a fundamental shift in how capital is allocated, how businesses get funding.
Exactly. And BlackRock is at the forefront of this whole transformation.
It's like they're playing chess while everyone else is playing checkers.
Yeah, they're thinking long term. They're looking ahead and trying to anticipate what the future of finance is going to look like.
And they seem pretty convinced that the future is private.
It seems that way, yeah.
Okay, so BlackRock is making this big bet. But what does it all mean for the average investor? What should we be doing to, prepare for this new world?
Well, the first thing is to expand your horizons. Don't limit yourself to the traditional investments. Start exploring alternative options, including private markets.
But those can be risky, and they're not always easy to access,
Me
right?
too. But that's changing. BlackRock is working on making private markets more accessible to everyone.
So it's up to us to do our homework, understand the risks, and see what options are out there.
Exactly. Knowledge is power, especially when it comes to investing.
Great advice. Any other key takeaways from BlackRock's earnings call that we should be thinking about?
Well, diversification is always important. BlackRock's moves just reinforce that. Don't put all your eggs in one basket, no matter how good that basket looks.
So stocks, bonds, real estate, maybe a little sprinkle of private
Maybe
market.
something like that.
And what about this whole active versus passive debate? BlackRock seems to be leaning back towards active management. Should we be doing the same?
Well, index funds still have their place, especially for long-term goals like retirement. But in a market like this, with so much volatility, active management might make sense for some of your portfolio.
So it's all about finding the right balance for your individual situation.
Exactly. There's no one-size-fits-all solution.
All right, well, I think we've covered just about everything. Any final words of wisdom before we wrap up?
Just remember, BlackRock is a bellwether. They're a leader. What they do today often becomes the norm tomorrow. So pay attention to their moves, learn from them, and use that knowledge to make smarter decisions with your own money.
That's a great takeaway. All right, folks, that's it for our deep dive into BlackRock's Q4 2024 earnings call. Thanks for tuning in to Talk Tickers, and we'll see you next time.